In this video we will look at the theoretical valuations of Iovance Biotherapeutics and its near-term candidates in a theoretical M&A transaction scenario. If a theoretical November 2025 acquisition was priced at revenue multiples per year to patent expiration consistent with the Mirati and CTI BioPharma acquisitions earlier this year in 2023. This theoretical valuation analysis also assumes the following 7 ifs happen as follows. Number 1. Lifileucel is approved by the FDA on or around its February 2024 PDUFA date and Number 2. If Lifileucel is approved in the European Union as hoped in 2025 and if Number 3. LN-145's Phase 2 trial is a success and the FDA then affirms the Phase 2 trial can be considered a registrational trial. Actually number 3 is really 2 ifs, is it not? Number 4. If LN-145 is expected to be approved for a non-small cell lung cancer indication in fiscal year 2026 and Number 5. If 2 years from now expanded labels for both therapies are still considered likely to be approved by the FDA, and Number 6. If, and this one is crucial, if current Iovance fiscal year 2030 consensus revenue estimates are more or less unchanged from today and Number 7. And most important, if all 6 prior ifs actually happen and then, if Iovance were to be acquired 2 years from today at revenue multiples per year of patent life remaining at exactly the same as those used in the Mirati and CTI BioPharma acquisitions earlier this year in 2023. We are not suggesting even one of these 7 ifs will happen. We also have no idea whether or not any Iovance product will succeed commercially. Seeking Alpha reported that Iovance's near-term candidate Lifileucel has been, quote-unquote, plagued with questions over efficacy, meaning whether or not it works. We are only assessing the theoretical potential valuation of Iovance if by chance all 7 happen. This is sometimes referred to as the reward in a risk v reward profile. We are otherwise not going to review Iovance's business nor outlook in any detail in this video. This is simply a hypothetical valuation analysis should everything go right for Iovance. More important, this video is dated, and uses information as of November 10, 2023. Facts and circumstances will certainly change thereafter, so you should not consider this video as accurate after November 10, 2023. Remember, this video is for entertainment purposes only. You should never rely on any of our analysis as the information we are presenting is unaudited and therefore could be grossly inaccurate. We are merely sharing a mathematical analysis and observation that may or may not be right. Most important, we never recommend anyone buy or sell a particular stock as we have no idea how stock markets or a particular company will perform in the future. We will share with you the catalyst for this theoretical valuation analysis of Iovance Biotherapeutics. Here we provide a simple graph of Iovance's share price year to date through Friday, November 10, 2023 as compared to the XBI. Of course, it's been a tough few years for biopharma valuations in general. Most would consider this an understatement. Whatever the case, and this may not be perfect, but we think you can see Iovance's share price more or less tracked to the XBI for most of the year, at least through the beginning of July. Then on July 11, 2023, a day after announcing pretty good data on Iovance's LN-145 candidate in non-small cell lung cancer that included a complete response and sent Iovance's share price up 21%, Iovance announced a dilutive equity raise at $7.50 per share. Since then you can see Iovance's share price has lacked the XBI. Okay, so let's look at Iovance's share price since July 12, 2023. First, remember on July 13, 2023 Iovance closed its financing at $7.50 per share. These in theory accredited institutional investors collectively wrote checks for $150 million to buy Iovance stock at $7.50 per share. Since then Iovance's share price losses have accelerated versus the XBI. We know the FDA moved Lifileucel's PDUFA date back 3 months, but is a 3-month delay worth a 50% loss in share price? We also know in mid-September one of Iovance's largest shareholders wrote a $26.5 million check to buy 5 million Iovance shares at $5.30 per share. This investor already owned 18 million Iovance shares, so had plenty of upside before writing the $26.5 million check. It is these 2 data points, huge institutional purchases at $7.50 per share 3 months ago, followed by another enormous buy by an Iovance insider at $5.30 per share not 2 months ago. Today you can buy the stock for $4 per share. We want to assess what it is these folks see. These 2 purchases were the catalyst for this theoretical Iovance valuation analysis. Of course it could mean nothing, but if these so-called quote-unquote smart money investors purchased so much Iovance stock over the last few months, and at higher prices, does it not suggest there may be upside to Iovance if all 7 things happen? Okay, let's have a quick look at Iovance's market cap and enterprise value. Iovance shares closed at $3.97 on Friday, November 10, 2023. We know there are 263 million shares outstanding, including equivalents like RSUs and conversion of 2 classes of preferred stock. Hence simple math, Iovance's market cap is roughly $1.04 billion. With a $427 million cash/debt in the bank, Iovance's enterprise value is just over $600 million. A look at Iovance's ownership profile, we see retail investors, which are schmucks like us, own just over 27 million shares. Institutions own 89% of Iovance. We find it interesting there are 39 million Iovance shares shorted where there are only 27 million available to cover via retail investors. While Iovance may fail, we struggle to understand the risk-v-reward profile of an Iovance short at $4 a share. What do we know though? We've been wrong so many times before, we are probably missing something here. Okay, let's have a quick recap of the Mirati and CTI BioPharma acquisitions to remind us how we come up with these multiples. We'll review Mirati here. Recall Mirati was purchased for $4.8 billion but held $1.1 billion cash in the bank to net to a $3.7 billion enterprise value. We know Mirati's consensus revenue estimate for fiscal year 2028, or year 5 from the date the acquisition was announced, was $1.04 billion. Hence, using simple math and dividing Mirati's enterprise value of $3.7 billion by year 5 consensus revenue estimates of $1.04 billion yields a revenue multiple of 3.6x. We understood Mirati's flagship product called Crazity was patent protected through May 2037, which was 13.6 years from the date the transaction was announced. Dividing the year 5 revenue multiple by the 13.6 years of patent life remaining yields a revenue multiple per year of patent life remaining of 0.26. Since Mirati and CTI's year 5 revenue multiple per year of patent life remaining was identical, even if a remarkable coincidence, we use it to assess potential or theoretical valuations for Mirati and CTI BioPharma peers. We should note Mirati's analysis excluded any consideration for the CVR worth up to $1.1 billion. It is possible that Mirati's consensus revenue estimate assumed revenues from pipeline products. This is exactly why we consider these directional estimates. Our analysis is otherwise flawed on many fronts. Before we get to Iovance, someone asked us to compare the Mirati and CTI BioPharma buyouts to other recent acquisitions. Here we provide you the results of the same analysis on the Prevention Bio from last March 2023 and the Global Blood Therapeutics acquisition from August 2022. None of these are ever going to be apples to apples peers, but again we use these for theoretical valuation analysis. Here you can see the year 4 and year 5 revenue multiples per year of patent life remaining. Prevention Bio's year 5 multiple was almost identical to Mirati and CTI BioPharma. The multiples from the Global Blood Therapeutics acquisition were slightly higher, but remember that transaction took place over 1 year ago where overall valuations may have been higher. We will share the Prevention Bio and GBT analysis in a later video, but big picture they more or less affirm the Mirati and CTI BioPharma year 5 multiples. Back to Iovance, since this a theoretical Iovance valuation analysis as of 2 years from now, again if all 7 of those ifs actually happen, and since net cash debt is a component of enterprise valuation, then we have to directionally estimate Iovance's net cash debt balance 2 years from now or as of September 30, 2025. Let's do that here. We know Iovance ended Q3 2023 with a net $428 million cash in the bank. In Q3 2023 Iovance generated an operating loss of $120 million that included $15.8 million in non-cash stock compensation expense and $6.1 million in non-cash depreciation and amortization expense, so Iovance's operations burned roughly $90 million in Q3 2023. We will ignore interest income on Iovance's cash balances. Using Q3 as a basis, let's assume Iovance burns $100 million in Q4 2023. We know Iovance CFO guided investors to expect $330 million in fiscal year 2024 cash losses. For the first 9 months of 2025 we know Lifileucel is expected to generate $432 million in revenues from $173 million in 2024. Remember, this whole analysis assumes Lifileucel will be approved. With those data points in mind, let's assume, as a back-of-the-envelope estimate, that Iovance burns $200 million in the first 9 months of 2025. Of course these assumptions are not perfect but appear directionally okay. Rolling these estimates forward, Iovance would be projected to have a negative $200 million cash balance by September 30, 2025. Obviously that is not possible, but we will use it for our market cap to enterprise value assumption. Hopefully Iovance sells a non-dilutive forward-looking royalty on Lifileucel revenues instead of a dilutive financing. Time will tell. Okay, let's get to our theoretical Iovance valuation analysis using the same year 5 revenue multiples per year to patent expiration from the Mirati and CTI BioPharma acquisitions. Like we did for BioCryst Pharmaceuticals, we will show Iovance right next to Mirati and CTI BioPharma. Also, Iovance differs from Mirati and CTI in that Mirati and CTI had one FDA-approved product and no real second late-stage product, where Iovance has 2 late-stage candidates. Again, the FDA will decide on Lifileucel's application, in theory, by the end of February 2024. Put simply, we will use the Mirati and CTI examples on both Iovance products. Also, since we are assessing Iovance's theoretical valuation if all 7 things happen as of 2 years from now, then year 5 will be fiscal year 2030. Last, Iovance owns a product called Proleukin that they purchased for about $200 million in Q1 2023. We will completely ignore Proleukin revenues in this analysis except to say it is our understanding Proleukin is used with Lifileucel. The last data points we need for this theoretical Iovance valuation analysis in a theoretical M&A transaction 2 years from now are patent expiration dates. We initially understood Lifileucel's patent will expire July 31, 2031. Unfortunately, and we apologize, but we cannot find the source suggesting that date. Hence we could be dead wrong here, but we will use July 31, 2031 in our analysis. This would be 5.6 years from November 2025. LN145, which is considered a next-generation Lifileucel, is patented through January 31, 2038. This would be 12.75 years from November 2025. Okay, let's do this. There are 3 analysts that provide Iovance fiscal year 2030 revenue estimates. We will start with the lowest Lifileucel fiscal year 2030 revenue estimate of $573 million. We apply the 0.26x revenue multiple per year to patent expiration and then multiply again by the 5.6 years left on the patent. This yields a theoretical valuation of $835 million for Lifileucel 2 years from now. LN145's low fiscal year 2030 revenue estimate is $477 million. We multiply this estimate by 0.26 and then again by the 12.75 years that would be remaining on the LN145 patent 2 years from today. This yields a theoretical LN145 valuation of $1.58 billion. Again, we're using the lowest fiscal year 2030 revenue estimates. Add the theoretical valuations of the 2 products together and you get a total theoretical Iovance valuation of $2.415 billion. Let's run the same using consensus fiscal year 2030 revenue estimates for both products. You can see Lifileucel's valuation would theoretically total just under $1.3 billion while LN145's theoretical valuation would be just over $2.4 billion. Add the 2 theoretical valuations together and Iovance would get $3.7 billion in an acquisition. Yes, we are excluding any consideration to the rest of the pipeline. Don't forget Mirati shareholders also got CVRs worth a total of $1.1 billion that is not considered in our Mirati analysis. Again, pipelines are excluded from all of our analysis except to the extent they may manifest themselves in revenue estimates. Okay, recall we estimated Iovance would have a negative $200 million cash balance. Hence, to get to enterprise value we must add back the negative cash, which is in substance considered debt here, to yield theoretical enterprise values of $2.2 and $3.5 billion using the low and fiscal year 2030 consensus revenue estimates respectively. Again, this not perfect but does suggest there is considerable upside to Iovance's market cap if all 7 ifs happen and become reality. Some consider accomplishments of these ifs as the cornerstone inflection points for BioPharma valuations. Let's try a second smell test on valuation by simply comparing financial related data points side by side. Here we show the 10-year consensus revenue estimates of CTI BioPharma and Mirati Therapeutics as of the day before they were acquired. Now let's see Iovance Biotherapeutics 10-year revenue estimates next to the 2 of them. We will also show you the number of analysts that provide revenue estimates by year. Now let's show the total revenues these 3 biopharma companies are expected to generate over the next 10 years. Just a reminder, for CTIC we used management revenue estimates to determine the associated revenue multiples, where here we are showing analyst estimates. CTIC management estimates were slightly higher than the analysts but not by that much. Let's show actual gross manufacturing margins and patent expiration dates. We understand Iovance's manufacturing process is quite complex but we are unaware of any Iovance guidance on anticipated gross margins. If Iovance's manufacturing margins are less than Mirati and or CTI BioPharma, then perhaps they should trade at a lower multiple. Time will tell, but back to our sniff test. On the top let's look at the enterprise valuations of the 3. Now let's divide the respective enterprise valuations by the total 10-year consensus revenue estimates. We see that both Mirati and CTI BioPharma were acquired at enterprise values that were 37% of the total 10-year consensus revenue estimates. By contrast, at roughly $4 a share, Iovance enterprise value trades at a mere 5.7% of total 10-year revenues. Does this not suggest that Iovance offers investors considerable upside if all 7 of these ifs actually happen, including a later, of course theoretical, acquisition at revenue multiples consistent with the Mirati and CTI BioPharma transactions? Said another way, if Iovance were ever acquired at 37% of total 10-year consensus revenue estimates like Mirati and CTI BioPharma were, then Iovance would be acquired for a hair under $4 billion. Folks, don't be a fool here. Remember, Mirati and CTI BioPharma have FDA-approved products where Iovance has none outside of the Proleukin therapy they acquired earlier this year. All 7 Iovance ifs have to happen for this analysis to be remotely close. For now all of this is theoretical. Again, it is only a sniff test but does suggest there is considerable upside to Iovance if all 7 ifs happen. Here we will very quickly share publicly available consensus revenue estimates. We should note these are Lifileucel revenue estimates only. Pharmaceutical Technology says global data forecasts fiscal year 2029 Lifileucel sales at $959 million. Carolyn RX says Lifileucel peak sales are expected to reach $500 to $750 million. Last, The Motley Fool says Lifileucel peak sales should be between $700 million and $1 billion per year. Again, we used fiscal year 2030 revenue estimates of $573 million as the low estimate and $879 million as consensus. Therefore, these estimates more or less align with our model. Last point, but it is important, remember this presentation has focused on a theoretical Iovance valuation if all 7 things happen, the most important being an acquisition 2 years from now. Just remember valuations are usually at a premium to a recent trading price. Hence you have to work backwards to account for the phenomenon. If our theoretical valuation analysis suggests Iovance is worth $2.2 billion in market cap in an acquisition using the low end of revenue estimates, that suggests the most Iovance would be worth pre-acquisition would be $1.3 billion, if the premium paid in the theoretical acquisition was 70% higher than recent trading averages. It is important to remember that any increase or decrease in market cap may not correlate to changes in share price. It is very likely IOVA will issue more common shares in the future, diluting current investor ownership. Thank you very much for taking the time to watch our video. We will follow up on this analysis in the years to come as well as others. Please take a moment to follow us and share us with your friends and colleagues. Thank you.